I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is Monday, July 11th.
And this is the interest rate update.
Real quick, this is for informational purposes only. This is not financial advice.
That's right, folks. We are smart, but we are not that smart. But we are pretty smart.
Yes. So what are we going to do today? We're going to be going into the 30-year fix, showing you where rates are today. And of course, be sure to subscribe, comment, and like, because we do this Monday through Friday. The 30-year fix today we see at 5.19%. The 15-year fix at 4.375.
And the 30-year FHA and the 30-year VA the same at 4.625.
All right, and these quotes are based off of these loan assumptions for conventional FHA and VA loans. And it's really important that everybody knows that, everyone's scenario is different, based off of whether you're going to be living in the home, your credit scores, what your sales price is going to be, if you're going to purchase, how much you're going to put money down.
That's right. Yeah, there's like 5 big variables. So it's like when you turn one of those little variables and you move it, like how many different scenarios can there be? We should probably figure it out.
Oh,
but like 25 maybe or something like that.
Yeah.
Anyway, so these are the big assumptions that we have, and every little variable that changes can change this.
And they come with no points, right? The way we're showing these rates, there's no buy down points, no discount points, no extra fees. You're going to notice a lot of extra fees from a lot of other banks right now.
Mm-hmm. Yeah, we will have fees in that these loans have costs. People need to keep lights on. They need to keep paper flowing. But again, there's nothing extra. There's nothing hidden.
Yeah, that's right. And we want to just give everybody a quick reminder, whether you've been tracking this or not, but this Wednesday, July 13th, the CPI, which is the inflation report, is coming out.
Consumer Price Index, right?
Yeah, that's right. And it's going to be showing us what that inflation number is from June of 2021 to June 2022.
Right. If you look at this, you may think, holy cow, we have almost 9% inflation a month.
And that
12 months.
Yes. And so that was the report that came out in June. Okay. So last month, the June report, which is reflecting the May 2021 to May 2022, inflation was at 8.6. So we're going to be really watching that closely. So be sure to subscribe, comment, and like. All right. So the 30-year fix since 1971, we see this, the big picture here. In 1981, interest rates were at 18.3% for the 30-year fix. That was that peak. Since 1986, they were stuck in this channel, really from 1986 all the way to March 2022, where they busted out of here, and interest rates have fallen. This is something we don't talk about that, or we haven't mentioned in a while, but that interest rates fall when you go into recessions. It's just what the Fed will do. And there's so much speculation whether we're going to be in recession or not. And if it does happen, we likely will see interest rates fall back down into this red column line. And again, there's lots of reasons why that will likely happen, as far as why a recession will happen, but why the Federal Reserve will push rates back down again.
Yeah. Someone asked me my opinion this weekend, and and it really is difficult to give any opinion as to where we are going to go. There's so many different options, but we are in kind of a wait and see mode right now. But we think, very likely we are going to see something similar to this. Will it look exactly like this? No, but we've been doing it for so long, for so many years, that we think eventually we're going to get back into that.
Yeah, that's right. Okay, so a lot of you who are buying a house or refinancing have been given loan estimates, the federal loan disclosure called the loan estimate. I want to point out that we'll be happy to do a review for you. Just be sure to email us, call us. We'll look at your the loan estimate for you. What you're really going to be looking out for is what is the interest rate right here. What kind of loan term is it? If you want a 30-year fix, are they giving you a 15-year fix? Or if they're, if you want a 15-year, are they giving you a 30? Right? You want to know what that is.
Good point.
Also, we want to. This is a 3-page document. This is the top of the first page. So number one, interest rate there, but we want you to really kind of focus in on that second page, top of the second page, Are there any discount points?
Those are those extra fees we talked about.
And this is an example. Again, this is not a real case that we are, this isn't a borrower we're working on. This is an example case. 5.19% today, a 30-year fix would come with 0 points, buy down points. So the total origination fees, all origination costs would be $1,050 based upon our estimate.
Yeah, and that is an estimate. Again, all lenders, should have that. If they don't, then they're going to do what we call push that into the rate, which would show you the higher interest rate. So again, it can get a little bit complicated, but every lender should have an underwriting fee or an admin fee or something similar to that. But it's the points that we're talking about that we are not charging.
And every day we see, for example, banks today will be, if they are charging 5.19% on the interest rate, we're seeing big numbers here. We're seeing $4,000, $5,000 right into this line for this scenario. So be on the watch out. Let us review your loan estimate for you. We'd be happy to do that. And we'll be back tomorrow, everyone.
Great. Hey, thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com and be sure to take a look at all of our other videos on our channel.